This content is for educational and entertainment purposes only. It does not constitute investment advice.
You see this chart? I've got a question for you. If you had to go long or short on this exact candlestick, what are you doing next? Now, before you answer, let's take a look at the facts. This candle just broke through 3 strong support levels in a single move. Volumes picking up as price collapses, and for hours, we see nothing but lower highs and lower lows. By almost any definition, this chart looks bearish. So now seriously ask yourself, are you betting on a breakout to the downside, or do you think this move is overextended and is about to snap back? All right, you've seen the setup, you've made your call. Now let's see what actually happened. When a candlestick with a long lower wick formed near key support, just like this, buyers often see this as a strong bullish signal. They jump in on the reversal, making anyone who went short increasingly wrong with every take back up. And that's exactly what happened in this example. This wasn't a breakdown, it was a trap. Price reversed almost 1% to the upside, all within the same candle, and left behind one of the nastiest wicks you'll ever see. If you shorted this breakdown, you wouldn't even have time to react. You would be wrong immediately, and now you're stuck at the bottom of this move with a short position. I've seen this happen to new traders more times than I can count. They chase the move and buy the breakout or short the breakdown, and 5 minutes later, they're staring at a giant wick and a loss they never saw coming. And in the worst possible scenario, price completely reverses from where they entered their position. But it's not just beginners. I've fallen into this exact trap myself more than one time. Usually when I deviated from my system, got overconfident, ignored my rules, and I decided this time looks different. Spoiler alert, it never is different. These kinds of moves are designed to trigger emotion. They look clean, convincing, but underneath the surface, they're built to trap us. And here's the part that really stuck with me. Every time I got caught in one of these moves, it wasn't because I didn't know better. It was because it looked so obvious. And that's the problem with these candles. They don't just take your money, they mess with your confidence. You start second guessing your system. You hesitate on your next trade, and you just fall out of sync with the markets. If you're anything like me, you've probably got caught in this setup more times than you'd like to admit, but enough was enough. So let's take an oath together. We're not going to let this happen, at least not like this, not because we ignored the signs and took an impulsive position. And to honor this oath, I started digging chart after chart, looking for the common thread. Was there something in the structure, in the size of the wicks? The speed of the move? I wanted to understand exactly why and how this trap worked, and how we can recognize it before it was too late. Because here's the truth, this isn't just about one candle. It's about how easily the market can fake conviction and how dangerous it is to fall for it. But the more I studied these setups, I started to notice something. Yes, sometimes these big candles did close near the low or high, and sometimes they did signal conviction. But there was a specific kind of candle that stood out during my testing. The ones that were huge. You know which candles I'm talking about. The ones that are so big they take up half your chart. And what I started to realize is that when a candle gets that large, it often doesn't hold. Instead, the move collapses within the same candle. Intrabar reversals, full wicks with no follow-through. Now, of course, an observation needs to be substantiated by a theory. So I started doing a ton of research on supply and demand dynamics, trader emotion, and tons of stuff you might have not even heard of. And I found out that when a candle expands this far, this fast, it doesn't just attract breakout traders. It attracts everyone. Momentum chasers, FOMO buyers, panic sellers, they all pile in at the extremes of these candles. And when that last wave of traders finally commits, there's no one left to push price further. And we quite literally see the move exhaust in real time over the course of a few seconds. And that's when these huge candles end up snapping back. Now, the observation was sound and the theory made sense. These massive candles, the ones that stretch beyond normal ranges, they often reverse because they quite literally exhaust the move in real time. But there was a problem. There's no universal rule for what counts as massive. No fixed size that works across every chart, every asset, and every time frame. Take this example. A 0.2% move on Euro USD might be enormous. But on Bitcoin, that's just everyday market noise. Some assets grind, some explode. And what looks extreme in one context is completely normal in another. So if I wanted to actually track these setups, to isolate the candles that were truly overextended relative to their environment, I needed more than just an idea. I needed a system, a program that could learn volatility behavior, adapt to each chart, and identify those rare, oversized intrabar moves, the ones that were statistically prone to snap back. But eventually, I realized this couldn't be hard-coded as an indicator. It had to adapt. It had to learn the asset's behavior, understand what's normal so it could flag what's not. And so we built it, a tool that does exactly that. It watches price action in real time, tracks volatility, and isolates those unusually large intrabar moves, the ones most likely to snap back. We call it Wick Slicer IQ. Just a quick heads up, Wick Slicer IQ is a TradingView indicator that's unlocked through an affiliate link. You'll find all the details in the description. And if you choose to use it, thank you for supporting the channel. And Wick Slicer does everything we've talked about so far. Using a proprietary self-learning algorithm, it adapts to both the time frame and the volatility of each asset. And by identifying overextended intrabar price moves, such as these two candlesticks on my chart, Wick Slicer takes on the opposite side of intrabar momentum. Now look, it's one thing to have a theory, to look at a few charts, spot a pattern, and think, yeah, this feels like it works. But as you guys know by now, that's just not good enough. Not for me. Because if I'm going to trade something seriously, I need to know how it's actually performed across time. Not just the moves I remember, but the ones I missed, the ugly ones, the edge cases, and when the market is quiet. And that's why Trading IQ built a backtester right into Wick Slicer IQ. So not only are you able to access Wick Slicer IQ, but you're also able to access the backtester that comes with it. And with this backtester, we can put the idea to the test across different assets, different time frames, in different conditions, and see if this theory really holds up. Now, before we go any further, just to be clear, what you're about to see are backtests. They're hypothetical, based on historical data, and they don't guarantee or predict future performance in any way. This is for educational and demonstration purposes only. No trades were taken based on these results, and this is not a signal or recommendation to trade. Now, here's what I've learned from using the Wick Slicer IQ backtester. There is a small few steps it takes to set up the backtester so we can take a look at the hypothetical performances found during the backtest. The first thing that caught my attention with this backtester were these two performance tables here. Now, you'll notice that in these tables is a column titled volatility. And if we open the backtester settings for Wick Slicer, we can see a volatility long setting and a volatility short setting. All we have to do is take the number in volatility long and put it into the volatility long setting, and then take the number from volatility short, which is 4.8, and put it into the volatility short setting. Once the correct settings are entered, Wick Slicer will apply the best fit parameters that it was able to identify based on hypothetical hypothetical backtests using historical data. And that's exactly the backtest that we see here for Bitcoin on the 30-minute chart. In this exact process that I just went through to set up Wick Slicer on Bitcoin can be used on any asset that's available on TradingView. So you can instantly see historical and hypothetical trades and backtests by using this method. Now, through my own testing, I discovered 3 key things about using Wick Slicer IQ, and they'll save you a ton of time. Number 1, the time frame matters a lot. The time frame you use Wick Slicer IQ on is absolutely critical. You need a chart that gives price enough room to breathe, enough space for it to spike in one direction and fully reverse, all within a single candle. Yes, you can find signals on lower time frames like on my chart, which is the 1-minute chart, but those ones are usually smaller, noisier, and more prone to random fluctuations. Personally, I found that the 30-minute, 1-hour, and 4-hour time frames worked better for me. Second, Wick Slicer IQ does not have targets or stop losses. Wick Slicer IQ was built to close trades automatically at the end of the candle, whether the trade is doing well or not. There are no built-in take profit or stop loss mechanisms, and that's because Wick Slicer's sole focus is for identifying overextended intrabar moves, not trade management. So if you decide to check out Wick Slicer, it's very important to develop your own exit strategy. And third and finally, one of the most important things I've learned about this self-learning indicator is that alerts make it way easier to use. You can set alerts on Wick Slicer IQ for any signal that appears, which makes the tool much easier to use in practice because you don't have to sit there watching the chart all day. Once the alert fires, you can check out the setup and decide what you want to do. So to sum it all up, Wick Slicer IQ isn't just about spotting big wicks, it's about understanding when a move has gone too far and using that insight to stay one step ahead of the crowd. Just remember, this is a tool. It is not a promise. It won't trade for you. But if you know what to look for, it can be a powerful way to spot moments of exhaustion that a lot of traders miss. If you got value from this video, don't forget to hit like, leave a comment, and subscribe for more. We've also got a Discord community with a ton of active traders. The link's in the description if you want to join us there. And if you're on TradingView or Twitter, make sure to follow us there too, where we post chart breakdowns, setups, and other trading insights you won't want to miss. All right, that's it from me. Thanks again for watching, and I'll catch you in the next one.